Hi everybody, Drew Stegman here, and today I want to talk about 3 dividend stocks that I really like. These are all high-yielding dividend stocks. The lowest yield on these stocks is over 4%, and so these are stocks where, for example, if you invest $10,000 into these stocks right now, you're going to get at least $400 in passive income every single year at the minimum, and a couple of these stocks yield more than 4%. We're going to talk about that. But if you are new to the channel and you want to see more videos just like this, be sure to hit that subscribe button. I talk all about stock market investing on this channel. And so if you want to see more dividend stocks to buy, some high yielders, be sure to hit that subscribe button so you don't miss out on any future content. Also, guys, head on over to WEBULL, get your free stocks. It's free, and all you have to do is deposit $100 to get up to 4 free stocks. So it's a great promotion, and I highly recommend at least going down to that link and signing up for an account, because even if you don't deposit $100, you still get 2 free stocks. So it's a fantastic promotion. And then finally, guys, I am launching my Patreon tonight. It will be up later this evening, so I'll leave that link in the description if you guys want to support this channel. And I really do appreciate all you guys who have wanted to support this channel thus far. I've gotten a few people who have actually asked me if I have a Patreon account. And so for you people out there who like this content, I am setting that up right now. After I make this video, I'm going to go on there and get that set up. It is going to be $4 a month. So you guys, I'm not going to have any kind of exclusive content on there right now just because I don't have the time to make 2 separate channels basically. But in the future, I do plan on doing some special Discord chats and things of that nature. But once again, guys, I appreciate all the support regardless of what you do. And let's get into the first dividend stock, LTC Properties. And I've talked about this stock on the channel before, and this is actually a real estate investment trust. It invests in senior housing and healthcare properties. It has 184 properties in the portfolio, 107 assisted living facilities, 73 skilled nursing facilities, and 4 in the other category. Currently, the price is at $38.65 per share, and it has a market capitalization of $1.52 billion. So this is in the small cap category, no doubt about it. And what I like about LTC Properties, one of the things, first off, the trend is your friend. Okay, so think about this: the amount of baby boomers who are retiring, and the amount of people who are age 60 and above, even 50-year-olds, right? There's a huge demographic shift. And these people are going to need nursing homes. They're going to need skilled nursing facilities in the future. And so this is an overwhelming trend, because as these people retire and they get into their 70s, their 80s, their 90s, we're already seeing this happen, but it's going to be even more pronounced in the next 10 or 20 years, because that's really when the baby boomers are going to start to need these types of properties. And so that's what LTC Properties has done, is they've positioned themselves to benefit from this trend. And so they basically own these properties and they collect rent from those properties that they own. And another thing I like about LTC Properties is that they have a very strong balance sheet, and they've weathered this storm very well. I mean, they've weathered COVID-19 like a champ, in my opinion. They have a lot of cash on the balance sheet. They currently have $22.8 million in cash and just $664 million in debt. They have nearly $1 billion in liquidity, so they are well capitalized, and they're also investing in their future. They're acquiring more properties. They're getting to the point now where they're setting up for growth. Actually, the management team came out, I think it was a couple quarters ago, and they specifically said that over the next several years, our focus is to grow this company. And so you're getting in, really, in my opinion, on the ground floor of a company that has dealt with a lot the last few years and has held up really strong. I mean, they actually had to deal with the bankruptcy of their largest tenant, and they've weathered that storm like a champ, and they haven't even cut the dividend. I mean, they've kept the dividend at 19 cents a share, and as I mentioned, the management team has come out and they've said that they are committed to increasing the dividend in the future. They're committed not only to growing the dividend, but also the share price. And at a market capitalization of just $1.52 billion, you're getting a tremendous value, in my opinion, when it comes to the future growth that I believe this company is going to experience. Now, the dividend is 19 cents a share, as I mentioned. And another benefit to owning this stock, if you like monthly income, if you like monthly dividends, this company pays a monthly dividend, pays $2.28 annually, And I think we are going to see a dividend increase before too long. Just how things have been going for this company, looking at the financials, I definitely see a dividend increase in the future. The dividend has been constant for the last few years, 19 cents a share. There really hasn't been a dividend increase, but I do expect more going into the future. And once again, I mean, they've weathered all these different storms that have come their way like a champ. And the reason is because they've had a fortress balance sheet to work with. They've kept adequate liquidity. And so this company is one of the top real estate investment trusts on my list. And last but not least, I mean, we can't forget the monster yield of LTC Properties, 5.9% currently. So for every $10,000 you invest, you're going to get $590 in passive income every single year rolled into your brokerage account. You can reinvest those dividends for more compounding income down the road. Definitely a solid stock. Definitely a stock that's set up for growth and long-term capital appreciation. No doubt about it. Increasing dividends, I think, are coming in the future. Really like this company. But anyway, guys, let's get on to the second dividend stock. That'd be Stag Industrial. Stag Industrial is a single tenant industrial property type real estate investment trust. So what that means is they are actually investing in a lot of warehouses. So that's the primary driver of their growth. And when you look at e-commerce, I mean, it doesn't take a rocket scientist to figure out that e-commerce is already here. It was the future 10 years ago, but it's still expanding at a rapid rate. And so when you think about e-commerce, think about this. How much is e-commerce going to grow in the future? How much is brick and mortar going to decline? I mean, if you take a real estate investment trust that invests in shopping centers and malls, that real estate investment trust will most definitely decline, in my opinion, more than likely. I mean, there's nothing to stop the brick and mortar retail apocalypse. But when you think about warehouses and distribution centers that are needed for the e-commerce trend, when you think about Amazon and how many warehouses they have, that's exactly what Stag Industrial invests in. And so once again, I mean, this company as well has massive growth potential ahead of it. Currently trades at $30.38 a share as I'm making this video, and it has a market capitalization of $4.53 billion. So larger than LTC Properties, but still, I mean, you could argue that anything under $5 billion these days is probably on the small cap side of things. You could technically argue that Stag Industrial is a mid cap stock, but I would say they're probably still on the small cap side of things. And I think this company as well is going to grow tremendously. And when we talk about the dividend, okay, the dividend is 12 cents a share paid every single month. Now, the last time they raised their dividend was in January of this year, and they raised the dividend from 0.119 to 12 cents a share. And Stag Industrial has a history of consistently raising dividends, and this is because they're able to continuously invest into these properties, these warehouses, and they get additional cash flow from the tenants that pay rent there, from the businesses that are operating online, but then they pay Stag Industrial rent. And so they are consistently growing revenues. They're consistently growing their funds from operations. This company, in my opinion, like I said, they are set up for massive growth, just like LTC Properties. And that also includes dividend growth. And we're already seeing that, I mean, as you can see from this chart, showing you just the last few years of dividend increases. You've seen a tremendous increase in the dividend just over the last few years. And Stag Industrial pays a nice solid dividend yield of 4.74%. So for every $10,000 invested, you're going to get $474 of passive income for buying this stock right now. And that's not even including the future dividend increases, the growth in the share price. I believe the share price is going to go up a lot more. It's had a nice solid share price appreciation over the last several years, but I think that's only going to continue with this company. Now, as far as their balance sheet goes, their balance sheet has $1 billion in debt, which you could argue is a big amount of debt. But when you actually look at the size of Stag Industrial, market cap of almost $5 billion, you look at their debt to equity ratio, you look at all their assets and all the cash flow they're getting versus their long-term debt, which, like I said, is about $1 billion. In addition, they have $74.7 million in cash on the balance sheet as of last quarter. So this is a well-capitalized company, no doubt about it. And in my opinion, this company is set up from a balance sheet perspective very, very well in terms of their debt to equity, in terms of how much cash they have on the balance sheet. So they're going to be able to invest a lot of that cash into additional warehouses and grow the business, grow the dividend, grow the share price. And for all of those reasons, I really like Stag Industrial. And when we think about stocks like Stag Industrial or LTC Properties, that yield in the 4 to 5% range. And then we look at the S&P 500. I mean, the S&P 500, I think last time I checked, it was a little over 1% in terms of the dividend yield. And the reason is because a lot of these stocks that pay dividends have been pushed up so dramatically in price over the last 9 months. I remember when a lot of these stocks had dividend yields in the 3, 4, 5% range. But now, I mean, it's hard to find stocks that even yield 2%. I mean, a lot of these stocks are yielding 1.5%, maybe 1.75%. And it's just because the prices have come up so dramatically and the dividends have not been able to keep up with the rising share price. So when it comes to these two stocks, huge income potential. We're talking about big dividend yields. So that brings me to dividend stock number 3. And this one might be a little bit more controversial. It is a sin stock. It's also one of those things where tobacco sales, I'm going to give you guys some hints before I actually name the company. So tobacco sales are on the decline in a lot of areas around the world, including the United States, but they're also growing in other areas of the world. So you have this kind of shift between certain nations and certain geographic regions where tobacco sales are going up. And this company hits on all cylinders in terms of tobacco. And in addition, this company also sells heated tobacco units. And these are actually designed to make tobacco use a bit safer. And they've actually been allowed by the FDA. So you can put claims on there on these heated tobacco units that say that they're actually safer than the normal way to smoke a cigarette or to use tobacco. And these heated tobacco units actually heat tobacco without burning the tobacco. In addition, this company is entering the vaporizer market, which is another way of basically diversifying their risk, because there's a big shift from smoking into vaping, because a lot of people believe that vaping is safer than smoking. And so this company, the stock that I'm talking about, is Philip Morris International. The ticker symbol is PM. This stock, no doubt about it, in my opinion, I mean, when you look at the net income numbers, the sales over the last several years, they've actually been doing very well, despite the fact, like I said, that tobacco sales are down in the United States and that tobacco sales are down in a lot of areas around the world. But like I said, in a lot of developing nations and, third world nations, tobacco use is actually on the rise. And so that's what Philip Morris International has been able to do. They've been able to capitalize on this. They're hitting these markets on all cylinders. And in addition, like I said, they have the heated tobacco units, which have been a huge revenue generator for this company, and the vaping market. So they're trying to diversify their risk as much as possible. And this has actually resulted in a net increase in sales for the company. It's actually resulted in them increasing the dividend. And it's actually resulted in net income being positive, cash flows going up. This company, Philip Morris International, in my opinion, is a great value stock, especially considering the fact that right now, for example, the company is trading at $85 a share, market capitalization of $132 billion. And by the way, the dividend yield is 5.65%. They recently raised the dividend from $1.17 to $1.20 in the third quarter. And they've consistently raised the dividend for several years. I mean, as you can see from this chart, just showing you the dividend history, you can see that this company has consistently raised their dividend. And that's the thing. I mean, a lot of other tobacco stocks are getting hit hard. And I was looking at some of the other tobacco stocks and the share prices are way, way down. But when I was researching those companies more, I did not like them as much as Philip Morris International. I think this company, what they're doing with their heated tobacco units, entering the markets that have the strongest potential for cigarette market growth, and also vaporizer products, all of that combined and resulting in an increase in sales. No doubt in my mind, this is a great value stock, especially considering the dirt cheap valuation. Because when you look at the valuation right now, they have a 17.24 price to earnings ratio, and their forward price to earnings ratio, which is based upon next year's estimates in terms of their EPS, is 14.92. And this is much lower than the S&P 500, which I think I was reading has a 37 price to earnings ratio on average, which is absolutely bonkers when you consider the fact that this company is way under the average. When you look at other companies, I mean, no doubt in my mind, this share price should be a lot higher. But what's going to happen when the share price goes higher is that the yield is going to go down. And so you're not going to get as much of a dividend yield. And right now you're getting a 5.65% dividend yield. So for every $10,000 invested, you're going to get $565 in passive income every single year. and you can reinvest those dividends for additional shares. But I believe this company is going to be around for a long time because they understand the tobacco market in a way that a lot of the other tobacco competitors don't, and they've seen their share prices get hammered. But in my opinion, it's actually held up pretty good compared to a lot of the other tobacco stocks. And so I really like Philip Morris International, and this is actually my #1 pick for tobacco stocks. I think this is a great value stock play, and this company does pay dividends every 3 months, so you're not going to get those monthly dividends like we mentioned with the other two stocks. But nonetheless, great company, and I think they're going to be around for a long time. And I think that they're going to survive whatever happens to the tobacco market because they're going to be able to adapt to the market. They're going to be able to find new ways to innovate and to actually grow sales, grow net income in any type of market environment, even if tobacco sales fall off a cliff, which they kind of are in, for example, the United States. But no doubt, in my opinion, this company is set up well to ride out any storms that come their way in the future. So anyway, guys, I hope you enjoyed this video. And if you did, if you would not mind smashing that thumbs up button, it does help out the channel. And also, guys, once again, if you want to see more videos just like this, be sure to hit that subscribe button so you don't miss out on any future content. As I mentioned, this channel is all about the stock market investing. You're going to learn about which stocks to buy, which stocks not to buy, which stocks to avoid. So if you do like those topics, then you'll definitely want to hit that subscribe button. Anyway, guys, thanks so much for watching till the very end, and I'll see you in the next video.